Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Haziq bin Muhammad Ayub. Our team will talk about audit of the capital acquisition and repayment cycle. I will be the first presenter. First of all, the characteristic of the capital acquisition and repayment cycle. Relatively few transactions affect the account balances, but each transaction is often highly material. For example, bonds are infrequently issued by companies, but the amount of bond issued is normally large. Their size make it common for auditor as a part of verifying the balance sheet accounts to verify each transaction taking place in the cycle for entire year. Next one, the exclusion or misstatement of a single transaction can be material. As a result, the auditor's primary emphasis in auditing this account is often on the completeness and accuracy balance related audit objective. Next, a legal relationship exists between the client entity and the holder of the stock, bond or similar ownership document. As the chapter opening case of Apple Construction Company demonstrates, the auditor must determine whether the client has met the requirement of debt or equity agreement. For the last one, a direct relationship exists between the interest and dividends account and debt equity. In the audit of interest-bearing debt, auditor should simultaneously verify the related interest expense and interest payable. This is also true for honest equity, dividends declared, and dividends payable. For your information, there are many accounts that involve in this cycle. First of all is not payable. The amount of principal due on a formal written promise to be paid. Loans from bank are included in this account. A legal obligation to a creditor which may be unsecured or secured by asset and bears interest. Next one is contract payable. If you have a large project going on, do not rely on the payables report alone and make a list of all contractors on the project. And then mortgage payable, a liability account whose balance is the unpaid principal balance as of the balance sheet date. A current liability is the amount of principal that must be paid within 12 months of the balance sheet date. Another account that involved in this cycle is bond payable. It is form of long-term debt. Bonds are issued by corporation, hospitals and government. Example, public utilities will issue bond to help finance a new electronic power plant. Hospital issues bond for new buildings, and governments issues bond to finance project, cover deficits, or to pay for older debt that is now maturing. Next one is interest expenses. On the income statement, non-operating costs are listed. It donates the amount of interest that will be paid on any sort of borrowing, including bonds, loan, convertible debt, and credit loans and credit lines. It is computed by multiplying the interest rate by the debt's outstanding principal amounts. The next one is appropriations of retained earnings. Any unappropriated retained profit that are not be used for dividends payment are referred to be appropriated retained earnings. The profits that have been put aside for a specific purpose by the board of directors. For the next one is accrued interest. The total amount of interest that has been accrued since the last interest payment date on a loan. Next is treasury shares, the part of of a company's stock held in its own treasury. It is impossible that treasury shares were repurchased or bought back from stockholder, or that they were never offered to the public in the first place. Next one is dividends declared. When a firm declares a dividend payment but does not send it to shareholders. Another account that involved in this cycle is ordinary shares. And ordinary shares is a type of equity that is subservient to all other types of equity. Ordinary shareholders partake in an entity's earning only after all other forms of share have done so. Another account is cash in the bank. The whole amount of coins, currency and cash has been deposited with a financial institution. Next one is preference shares. Preference shares are corporate shares with dividends paid to stakeholders before dividends on regular share are paid up. Next one is donated capital, a gift of asset to a firm made by a government, generally a state or local government, to entice a company to relocate to their territory. The fair market value of an item at the time it was received. It was received as a gift is a component of shareholders' equity. Another account is dividends payable. Dividends that a company's board of directors has declared to be payable to its shareholders. Next is retained earnings. The earnings a firm has made so far minus any dividends or other payouts to investor. Another two accounts that involved in this cycle are proprietorship capital account and partnership capital account. For proprietorship capital account, a type of corporate entity in which one natural person owns and runs the company, and there is no legal distinction between the owner and the company. The most basic business structure that may be used to run a company but is not legal as organization. A business owner who is personally liable for the company's obligation. For partnership capital accounts, an equity account in a partnership's accounting record. The amount of money or other property that all of the partners have donated to the firm permanent endowment with the approval of the others. That's all from me. I will pass to the next presenter. Thank you.
Hi and Assalamualaikum. My name is Ikmal Hakim bin Muhammad Hisham, and I will talk about methodologies for designing tests of balance for payroll liabilities. Alright, for this part, got three phases, which is the first phase are identify client business risks affecting notes payable. After that, set performance materiality or tolerable misstatement and assess inherent risk for notes payable. Assess control risk for notes payable also included in the first phase. Okay, for second phase, design and perform tests of controls and substantive tests of transaction for capital acquisition and repayment cycle. The last one is phase 3, which is design and perform analytical procedure for notes payable. Also design tests of notes payable to satisfy balance related audit objective, which is audit procedure, sample size, item to sellers and timing. So, next one, I will talk about notes payable. A notes payable is a legal obligation to a creditor which may be unsecured or secured by assets and bears interest. Typically, a notes is issued for a period somewhere between 1 month and 1 year, but longer term notes exist. Notes are issued for different purposes, and the property pledged as collateral includes a wide variety of assets, such as securities, account receivable, inventory, and fixed asset. The principal and interest payment on the notes must be made in accordance with the terms of the loan agreement. For short-term loans, a principal and interest payment is usually required only when the loan becomes due. For loans over 90 days, the note usually calls for monthly or quarterly interest payment. Alright, for the objective of audit of notes payable are to determine whether internal control over notes payable are adequate. The next one is transaction for principal and interest involving notes payable are properly authorized and recorded in accordance with the 6th transaction-related audit objective. The third one is the liability for notes payable and the related interest expense and accrued liability are properly stated as defined by 7 of the 8 balance-related audit objective, which is realizable value is not applicable to liability accounts. And the last one is disclosure related to notes payable and the related interest expense satisfy the 4 presentation and disclosure audit objective. That's all from me. Thank you.
Hello and Assalamualaikum. My name is Nurfaradiah and I will continue our group presentation for chapter 22. So, there are 4 controls over notes payable, and which are: the first one is proper authorization for the issue of new notes. The second one is adequate controls over the repayment of principal and interest. The third one is proper documents and records, and the last one is periodic independent verification. For the first internal control, all official documents need signature, especially like loan agreement. And for renew of notes payable, they must do the exactly same procedures like new payable notes. For the second internal control, the periodic payments of interest and principal should be subject to the control in the acquisition of and payment cycle, and a copy of notes provide the supporting documentation for the payment. For the third internal control, these include subsidiary records and also control over blank and paid notes by an authorized official. And for the last internal control, periodically the detailed note records should be reconciled with the general ledger and compared with note holders' records by an employee who is not responsible in terms of maintain the detail of the records. Okay, this figure shows us the notes payable and also the related interest account. So auditors commonly include tests of principal and also interest payment as the part of the audit of the acquisition and payment cycle, because the payments are recorded in cash disbursements journal. Okay, we will proceed to the next slide, which is about test of control and also substantive test of transaction. Alright, test of notes payable transactions include the issue of notes and also repayment of principal and also interest. And these audit tests are part of test of control and also substantive test of transaction for cash receipts and also cash disbursements. And test of control for notes payable and also related interest should emphasize tests of the 4 internal controls that I've explained before. Alright. Alright guys, so now we will proceed to the analytical procedures for notes payable. So there are three analytical procedures and also the possible misstatement. The first one is compare individual notes outstanding with those of the prior year, and the possible misstatement here is omission and also misstatement of a note payable. And the second one is compare the total balance of notes payable, interest expense, also accrued interest of the prior year balance. And the possible misstatement here is misstatement of interest expense and also accrued interest or notes payable. So for the last analytical procedure is recalculate approximate interest expense on the basis of average interest notes and also overall monthly interest payable. So the possible misstatement here is misstatement of interest expense and also accrued interest or omission of a notes payable. So that's all from me, Nurfaradiah, Alissa, and I will pass the next presenter. Thank you for listening.
Assalamualaikum. My name is Aisyah and I will explain about major balance related audit objective in notes payable. There are three important balance related audit objectives in notes payable, which are completeness, accuracy, and presentation and disclosure. Completeness is to make sure the existing notes payable are included. Why completeness is more important than existing for loan? It is because completeness is to make sure there is no unrecorded transactions, but existing is to make sure the transaction is valid on a fictitious transaction. For example, some of fraud cases, which is some company hide their liability to avoid going concern problem or liquidity problem because the company have too many liabilities compared to the assets. Next is accuracy. Accuracy is to make sure notes payable and the installment are properly recorded. So it can avoid mistakes such as key in the wrong information. In addition, presentation and disclosure are also important because, for example, if you have secured loan, you need to disclose your asset which has been as collateral for your acquired loans, such as mortgage loans. Next slide. Next slide. Okay, next slide. This is the example of schedule of notes payable and accrued interest that is prepared by auditor. Payee is the list of the loan that your client made, and the first amount of note is the amount of loan your client which your client have three loan amounted, which amounted RM10,000 ringgit for each loan. For security, the secured loan against investment. For security is the secured loan against investment and fixed assets. So all in this slide is secured loan. For valuation, when we want to pledge our asset over our loan, you must make sure that the value of your asset is more than the value of your loan. It cannot be lesser. Next, we have 10,000 ringgit in the break forward, which means this is the previous year loan. If for the second and third bank, in the slide have no amount, that means it was a newly acquired loan. Next slide. You can see at the addition in the next slide, the loan is acquired this year and the carried forward the amount has zero rise where the loan have been fully settled to the bank. So in the interest column, you want to see if there is accrued interest or not. As we can see, the loan for the first bank has been settled, so there is no accrued interest. But the client have accrued interest for second and third bank, which amounted 250 ringgit and 167 ringgit. For the next slide. Okay. Assalamualaikum, my name is Aisyah and I will explain about major balance related audit objective in notes payable. There are three important balance related audit objective in notes payable, which are completeness, accuracy and presentation and disclosure. Completeness is to make sure the existing notes payable are included. Why completeness is more important than existing for loan? It is because completeness is to make sure there is no unrecorded transactions, but existing is to make sure the transaction is valid or no fictitious transactions. For example, some of fraud cases, some company they hide their high liability to avoid going concern problem or liquidity problem because the company have too many liabilities compared to the asset. Next is accuracy. Accuracy is to make sure notes payable and the installment are properly recorded. To avoid mistakes such as key in the wrong informations. In addition, presentation and disclosure also important because if you have secured loan, you need to disclose your asset which has been pledged as collateral for your acquired loan, such as mortgage loan. Next slide. This is the example of schedule of note payable and accrued interest that is prepared by auditor. Payee is the list of the loan that your client made, and the first amount of note is the amount of loan your client, which your client have 3 loan amounted are 10,000 ringgit for each loan. For security, the secured loan again investment and fixed assets. So as we can see, all in this slide is secured loan. For valuation, when we want to pledge our asset over our loan, you must make sure that the value of your asset is more than the value of your loan. It cannot be lesser. As you can see in this slide, the value of asset is more than loan. Next, we have RM 10,000 ringgit in the balance of beginning of period, which means this is the previous year loan. As you can see, the second, the column for second and third bank have no amount. That means it was a newly acquired loan. Next slide. Next slide is, you can see at the addition in the next slide, the loan is acquired. The next slide. And next slide, you can see at the addition in the next slide, the loan is acquired this year. And you can see at the carried forward column, the amount has zero rise, which means the loan have been fully settled to the bank. So in the interest column in this slide, we want We want to see if this is accrued interest or not. As you can see, the loan for the first bank has been settled, so there is no accrued interest. But the client have accrued interest for the second and third bank, which is amounted to RM150 and RM167. For the next slide. Next slide is to identify the primary in the audit of owner equity transactions. Okay, next slide. Next slide. In business, we have private and public listed company. Public held corporation is the public listed company, and closely held corporation is private company, which is Indian Berhad. For public listed company, to get more capital, the share will be issued to the public. But for private company, the shareholder is usually the owners. Public listed company have many shareholders and also have frequent transaction, while private company has simple and few transactions, few shareholders and occasional transactions. Okay, for the next slide. There are two types of shareholder, which are institutional shareholder and individual shareholder. Institutional shareholder is is people who invest or buy share in bursa. For example, KWSP, Hazana, Tabung Haji, and so on. People who invest in the big amount is the majority shareholder, and people who invest in the small amount is minority shareholder. For individual shareholder, is a shareholder that is not an institutional investor and who is not a party to the employer shareholder agreements. Okay. Next slide. Next slide is the objective for each to determine whether internal controls over share capital and related dividends are adequate. Second, honest equity transactions are correctly recorded as defined by the 6 transaction-related audit objectives. Third, honest equity balances are properly recorded as defined by the 8 balance-related audit objective and properly presented and disclosed as defined by the 4 presentation and disclosure related audit objective for honest equity accounts. Okay, for the last slide is the example of honest equity and dividend amount. For example, what is the relationship with owner equities between owner equities and cash? For example, if the investor agreed to invest RM100,000 into your business, so the RM100,000 will be in the debit side in cash account, and the credit side in the cash account is for the amount of dividend you need to pay to your shareholder. Okay, so that's all from me. Then I will pass to the next presenter. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nabil bin Azmi. My ID is 62213221016. And now I will continue our group presentation. I will talk about the internal control in the capital acquisition and repayment cycle. There is 3 internal control. The first one is proper authorization of transaction. Many of equity transactions must be approved by the board of directors. Transactions such as the issuance of capital share, repurchase of capital share, and declaration of dividend require board approval. For issuance of capital share, authorization include the type of equity to issue, preferred or common stock, number of shares to issue, par value of the stock, and date of the issue. For repurchase of capital stock, repurchase common or preferred stock, timing of the repurchase, and the amount to pay for the share should all be approved by the board of directors. And lastly, for declaration of dividend, board of directors must authorize form of dividend such as cash out stock, the amount of dividend per share, and also the recorded payment date of dividend. The second internal control is proper record keeping and segregation of duties. When a company maintains its own record of share transaction and outstanding share, the internal control must be adequate to ensure that the actual owners are recognizable in the records, the correct amount of dividend is paid to the shareholder, and the potential for misappropriation of asset is minimized. There is 2 important things, which is capital stock certificate record and shareholder capital stock master file. For capital stock certificate record, the company will buy back the stock, then remove it from the records. This is how they make sure the actual owner is on the book. And for the shareholder capital stock master file, It is a record of outstanding share at any given time. It is also used as the basis of the payment of dividend. And the final internal control is independent registrar and share transfer agent. Any company with listed share is required to engage an independent registrar as a control to prevent the improper issue of share certificate. The registrar is responsible for signing all newly stocked certificates and making sure that all certificates are received and cancelled before a replacement certificate is issued. Many companies employ a share transfer agent to maintain the shareholder records, including those documenting transfer of share ownership. Now, I will talk about the audit of capital share and paid-in capital and what is the auditor's concern when auditing capital share. The first one is completeness. This is when that existing capital stock transactions are already been recorded. This objective will easily satisfied when a registrar or transfer agent is used. The auditor must confirm with the client whether any capital stock transaction occurred and the accuracy of existing transaction. The next audit objective is accuracy. This is when the capital stock is accurately recorded. The auditor must verify the ending balance in capital stock by determining the number of shares outstanding at the balance sheet date. After that, the audit objective is occurrence and accuracy. This is to when the recorded capital stock transaction exists and are accurately recorded. The occurrence transaction related objective can ordinarily be tested by examining the number of the board of directors meeting for proper authorization. And the last one is presentation and disclosure. This is when the capital stock is properly presented and disclosed, the most important source of information for determining whether all presentation and disclosure related objectives for capital stock activity are satisfied. Okay, now I will continue our group presentation with the audit objective when auditing dividend. The first objective are occurrence. This is to ensure that the recorded dividend has been occurred and the dividend are paid to the shareholders that exist. Auditor can verify the occurrence of recorded dividend by examining the minute of board of directors meeting for authorization. The second audit objective is completeness. This audit objective is to make sure that the existing dividend and dividend payable are being recorded. And lastly is accuracy. This objective is to ensure that dividend and dividend payable are accurately recorded. Accuracy of declared dividend can be audited by recalculating the amount of the basis of dividend per share times by the number of shares outstanding. Test of dividend payable should be done in conjunction with declared dividend. Any unpaid dividend should be included as liabilities. Lastly, when auditor is auditing retained earning, it is usually about the review and analysis of the changes in retained earning. Therefore, there are two transactions that will be involved, which is net earning for the year and also dividend declared. When auditing retained earning also, there may be few corrections towards few such as prior period endings, prior period adjustment and also appropriations of retained earning. So that concludes our group presentation, and I hope all of our viewers can understand what we want to convey. We would also like to thank Madam Masniza for her cooperation throughout the process of preparing this video. Thank you.